Well, much of the market's still fascinated by this transaction that's come through and the decision you've made. So at the top, let's reiterate why exactly Village believes it can turn around an operation that DRDGold has said before it sees as virtually bankrupt.
It certainly was. Towards the end of last year, it was put into business rescue. It came out of business rescue during the rising gold price. But the fundamental challenges there are the same. DRD has announced that they need to shut down 2 of the 3 underground shafts, and then there's some surface retreatment operations which are profitable. So on the one hand, this is about the gold price. It is quite a favorable gold price environment. And secondly, this is a continuation of the sunset industry finding ways to hand assets down to smaller operators who can do things differently, and that's where we fit in as Village.
It's handing it down to you at a price tag of 192 million rand. I mean, obviously you're not going to make an investment like this purely on the back of, the outlook on that gold price, which is so volatile moving forward. To what extent, though, is this dependent on the gold price sitting where it is, above the $1,500, $1,600 an ounce levels?
We certainly would look even more stupid than what we may be if the gold price were to go back to 300,000 rand a kilogram, because really it's a rand per kilogram gold price that is relevant in our lives. But around 380 to 400,000 rand a kilogram, we think that we can make our money back with decent returns. Obviously, this is a high-risk strategy, and therefore we need to reward our shareholders over a period of time with above-average rewards. We do this on the back of a very successful acquisition and turnaround of the Cons Merge mine. More recently, we bought the assets out of Simmer and Jack, the Taulekwa, and especially the Buffels mine, very similar. And we are very happy with our proven turnaround of those. On top of that, the gold price.
So the diversification that you're seeing, where you've got exposure to these various components or various mines across the board, also mitigating some of the risk that this brings to Village Reef's table.
Certainly, if you've got 3 high-risk gold mines, you've got portfolio risk diversification. But unashamedly, I mean, Village is not for your mother-in-law's pension money.
Okay, let's take a look at this operation specifically, Blyvoor. I mean, how are you going to impact on its production and cost levels and make it sustainable at more realistic gold prices? Well,
your assumption is that the current gold prices are not realistic. Most of my shareholders will differ with you, even if I tend to agree with you.
We were just chatting about it this morning, and we were saying that it's the CEOs of gold companies that are very bullish about this gold price movement.
Well, we better be. If we aren't, we'll get fired. So, it's a bit self-fulfilling. Now, we certainly need to run mines which are sustainable almost regardless of the gold price. And then when we get windfall profitability like now, we should invest that very smartly or return it to our shareholders. DRD, out of necessity, has embarked on a Section 189 restructuring process. They have announced that they need to take some 40% of the workforce out of the current employment, and that's shutting 2 of the 3 shafts. So that's a very necessary and painful step. And then after that, we really need to bring some of the things we think we do uniquely. A small company with a different approach, underground mining of higher cost gold mines is our core business. And we would like to think that we've demonstrated that, but we'll be able to re-demonstrate that at Blyvoor.
Where you've got cost structures in focus on the one hand, what about production at the mine at the moment? What are we looking at, and what kind of targets have you set, for the road ahead?
Well, Blyvoor is a bit of an anomaly. That on the one hand, it declares 7 million ounces of reserves, but on the other hand, it only produces 80,000 ounces a year. Now, that's a mismatch. You can't have a ore body that seemingly is in that healthy situation but produce so little. There are some real practical problems. In the short term, that 80,000 ounces a year is going to come down. We think this restructuring will take it down to 55,000 ounces. And only once we've then really been able to get on the ground and run the mine, which is another 2 or 3 months into the future, will we be able to talk about potential growth. But these old South African mines are in the last phase of their lives. They are not about to double.
Which means you've got to go deeper as well. So what kind of challenges does that bring to your table right now? Because it has been highlighted that this is a difficult area to mine in at this stage. Lots of dolomite rock around, lots of sinkholes that you've got to contend with.
We are fortunately so much deeper than those problems. Those were the problems of that area of 50 years ago. I mean, today a deep level South African gold mine has got water problems. We certainly pump over 20 million litres of water a day. We would argue mainly in the interest of our neighbours, but they like us to pump it on their behalf. And then seismicity and rock burst is a reality, and that's part of one's infrastructure cost. I mean, safety, I think, quite importantly over the last 3 or 4 years have become the first thing you deal with, not the last thing you deal with. Yeah. And so that's just part of the cost of running a mine like that.
Well, what about, what does it say, the fact that you're going for this mine specifically, what does it say for the kind of opportunities that are out there for smaller gold producers like yourselves moving forward?
This is where we want to be. This is the specific niche we think we've got the skills, the balance sheet, the shareholders for. You see lots of transactions in the South African gold industry, recently announced transactions, and you'll see even more. But this is where we want to play. We want to buy assets which are cheap for good reasons, and then we want to try and make them worth a lot more, and in time even return some of that value to our shareholders through on selling these assets later and paying special dividends.